What to do if your stock is down 25, 30, or 40%. First off, do not get emotional about it and don't make an emotional decision because your loss irritates you every time you see it. The way I see it, you have three choices. First, you could just sell the stock and forget about it. Second, you could buy more because you're trying to dollar cost average down and hopefully recover quicker. And the third option is you step back, drop the emotions, and look at the fundamentals of the stock. By this I mean you should take an objective view of what the stock is worth. I believe it is important to remember that owning a stock means you have partial ownership in that company. I believe the best option here is number 3, which will take a little bit more of your time, but it was well worth it. When you're looking at the fundamentals, you should look at what you are paying for the earnings of the business, both over the past 12 months and going forward. If both the forward PE and the PE for the trailing 12 months are low, verify that the earnings are from operations and not from gains on sales, such thing as a sale of an asset or a building. You should also take a look at what is the cash flow. What is the cash flow of the business? And ask yourself a question. Will this amount of cash flow continue going forward? Next, I'd recommend you take a look at the debt of the company and the current ratio to see if the company is going to have trouble paying their bills going forward. A low current ratio would mean that they don't have much liquidity, which could make it hard to pay for future bills. As far as the debt goes, we like to look at the debt to equity. If it is more than 1.4 times, you may want to consider selling the stock, especially if you can see that the debt has been continually increasing over time. Too much debt could cause a company to go bankrupt, which then leaves a shareholder with nothing. There are many other factors to look at, but I believe the few that we mentioned here will help you most of the time to stay out of hot water. Once you do your due diligence, it may make sense to sell a stock if the fundamentals have broken down. It also could make sense to add to the position if the fundamentals look strong and you know you have a small allocation to that position. Keyword there is you know. Make sure you check that. The main point we want to make here is this decision should not be a quick, nor should it be an emotional decision. Remember that investing is for the long term, so be patient and think about where the investment will be 2-3 years down the road, not the next week or two. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.